Welcome back to our channel. Today we dive into how to use limit at market orders in crypto trading. Let's start with market orders. A market order is a request to buy or sell a cryptocurrency at the current market price. This type of order is executed immediately. It's great for traders who want to enter or exit a position quickly. However, there are pros and cons. The main advantage is speed, but the downside is that you may not get the exact price you want. Market orders can be affected by price slippage, especially in volatile markets. Now, let's talk about limit orders. A limit order allows you to set a specific price at which you want to buy or sell. This means you have more control over the price you pay. However, limit orders might not be executed immediately. The advantage of limit order is that you can avoid price slippage, but the downside is that if the fine market doesn't reach your set price, the order wouldn't execute. This can be risky if you're trying to capitalize on a rapidly changing market. So, when should you use each type of orders? Use a market order when you need to enter or exit a trade quickly. On the other hand, use a limit order when you have a specific price target in mind. In conclusion, exploring of limits and market order is crypto trading. Remember, using these orders wisely can help you manage your trades more effectively and minimize risks. Thanks for watching. Happy trading and see you in the next video. Goodbye.